All right, so in today's episode, I want to talk about life insurance and more specifically about employer owned life insurance and how it compares to your different options out there. So, first, let's talk about what employer owned life insurance is. Now, anybody out there who works for bigger companies or even some smaller companies are offering it now has the option to buy life insurance through a group life insurance policy as part of your benefits package. Usually it's some sort of multiplier of your salary up to a certain amount. And typically if you're younger, if you're younger in age, then it's relatively inexpensive, $3, $4, $5 a month. There are a couple of things that are really important to know and understand about that as you look down the road. And most of us in younger generations, we're not considering what's going to happen to us when we're 40, 50, 60 years old. But this is one area that it's important to pay attention to. So as I mentioned, these group life insurance policies, one, they are typically capped at a certain amount or certain multiplier of your salary. Now, for most people, that could be adequate. It could be enough insurance to cover the mortgage. It could be enough insurance to provide continued income to their spouse should something happen to them when they pass away. And they're getting it at an absolute great deal. Now, I want to make one thing very clear. My recommendation is always to take as much of your employer offered life insurance benefit as you possibly can. Given how much you can get and the cost of it, it is a no-brainer. But the point of this video is to encourage you to consider the long-term implications and what you may or may not need down the road. So again, as I mentioned, it's typically relatively inexpensive, but some of the downsides to employer-owned life insurance. Number one, it's temporary, meaning so long as you work at that company, you have that benefit. But whether you leave that job, you start your own business, you're a spouse that stays at home and takes care of the kids, or more importantly, you retire. When any of those things happen, you are no longer going to have that benefit through work. And most people will say, well, I really just need the life insurance now and I'm getting what I can while it's cheap, and I get that. But when you start to think about the reason behind buying life insurance, and really everybody's primary reason for buying it is to either pay off a mortgage, pay off debt, to provide continued income if they're the breadwinner for their family, to take care of their kids, put them through school, make it so that their lifestyle does not have to change if you're no longer here. With that said, whether you retire at age 65 or you leave that company in 5 years, odds are you're still going to have a need for life insurance that you will no longer have through your employer. There are a couple of options. You could wait until you're 65 and then go out and buy life insurance, but at that point it's going to cost you an arm and a leg, and the odds are you just won't do it. Versus if you consider an alternative option while you're employed, while you're young and in good health, you could have something that's going to stay with you forever. There are a couple of other downsides to it. Number one being, obviously, when you're young and in good health, most of these employer-sponsored plans will be relatively affordable. But as you get older and you have changes in health, depending on the size of your company and whoever's offering their benefits, you may no longer be eligible, or it may cost you a lot more. I have a friend who has some health conditions and he's in his late 20s, who doesn't qualify for their employer plan, and they have 500 employees and offer great benefits. But they declined that person's coverage because of the health, challenges that they have going on. I say that to say if whether you're in good health now or not, down the road, understand that it's very likely to experience health changes, whether it's gained weight, whether it's new diagnosis, whether it's just being older. If you wait until that point in time, it's only going to cost you more to get life insurance outside of work. The other piece to it, and we're going to dig into this a lot more, so I don't want to over confuse everything today, but that, as I mentioned, is temporary insurance with no living benefit. Okay, there are other policies out there that will offer cash value growth. It'll offer living benefits, money that you can draw against, money that you can get in advance if you have terminal diagnosis, whatever it may be, that are a lot more advantageous than what you have through work. Now, again, as I mentioned, I always recommend taking everything you can get from your employer, assuming it's extremely affordable. But to consider the advantages of what you have through work versus what you may have somewhere else, it would be worth looking at alternative options. Now we'll look at an example, and I'll use myself personally. When I first started working for a big company right out of college, they offered up to 5 times my annual salary for life insurance, and I think it cost me like $4 and some change a month. And it was a no-brainer. I took every dime of it. However, being that I was working for an insurance company, I saw the advantages and disadvantages to having, just employer-owned insurance. And for me, it worked out perfectly because after 7 years working for that company, I decided to leave and start my own business. And when I left that company, I no longer had my health insurance benefits or my life insurance benefits through them. Fortunately, while I was working there, I took out individual life policies on myself so that in an instance like that, I would already be locked in. I'd have some sort of living benefit. And we did the same exact thing for my wife, who is also self-employed and works part-time at the hospital and does not get those life insurance benefits. And at any point in time, I understand you may be sitting there saying, well, I'm never going to leave this company. I'm always going to have a job. But then let's look down the road, and we'll use my dad as an example. My dad is 62 years old and plans to retire this year. Currently, he has, I believe, $400,000 of life insurance through work, as well as some dependent policies on my mom and his kids. But when my dad retires in the next 12 months, he's no longer going to have life insurance. And because he never took out a life insurance policy on himself individually, we looked at the numbers. And for him to go out and get something that he's going to have to pay for out of pocket, it will cost him an arm and a leg and simply just will not be affordable. So if you're thinking, hey, you're 30 years old today, and in 32 years, I'll just get my employer-owned insurance and I'll wait until that point in time. Well, who knows if you're even going to qualify? Who knows if you're even going to be able to afford it? Versus the alternative option of, let's say you take out a personal life insurance policy on yourself today. And in 32 years, when you go to retire, you decide you don't need it. If you took out the right policy or you built it the right way, you could get all of your money back plus interest on the money you paid into that life insurance policy if you decided you didn't need it. So whether it's a term policy or if it's a universal life policy, which again, we'll discuss further down the road, there are so many other options that provide different benefits in addition to what you're going to get from your employer. The benefit to your employer-owned life insurance or your benefits plan is that it's the ability to get a lot of temporary protection to protect your mortgage and to protect any car loans or student debt. But when you think about what's in it for your family when you pass away, maybe that's not until you're 60 or 70, well, now you're going to be wishing that you had alternative ways to protect them. And that only can come in the form of some sort of plan that you put in place on yourself for a long-term purpose. Okay? So just to recap, as I mentioned, some of the biggest things to know about your employer-owned life insurance. Number one, it's temporary. If you no longer work at that company in any fashion, that benefit will go away. Number two, it's limited in how much you can get. Maybe it's 2, 3, 4 times multiplier of your salary. And for some people, that could be up to $500,000, $750,000. But in your individual case, you may warrant more, depending on your lifestyle, depending on what you need to provide for your family when you're no longer around. Okay? And the next piece and the final piece is you're missing out if you wait until you get down the road to take out a personal life insurance policy when you truly need it. Odds are at that time, you either won't qualify for it or it'll be too expensive for your budget. So there's some things to keep in mind as you talk about your life insurance. You're thinking down the road about the worst case scenario, and we'll dig into more of the different concepts and what's available out there down the road. But I at least wanted to share this as a starting point for most younger people who have employer life insurance to understand what your benefits are and what they are not, so that way you can make informed decisions moving forward. Thanks for checking out the video. Be sure to subscribe and stay up to date with the other content that we're putting out. As always, I'm Hunter McHugh. Thanks again.